Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The world's richest man walks into the White House.
So, Elon, if you could get up and explain where you are, how you're doing.
I actually just put myself a humble tech support here.
Elon Musk's role in the new Trump government got a public viewing at the administration's first cabinet meeting, but is the work impacting his valuable companies?
Trump's strategy in danger shift to electric cars. I mean, you'd have to think that that's true.
Plus, who's in charge? Staff firings on the bubble, tariff deadlines once again approaching. Our reporter Eamon Javers on the culture inside Trump world.
What he's doing is setting up a process here in which all the deadlines are up to him by fiat.
And a special conversation with Tony James, once Blackstone's president and COO. He's chairman of the board of Costco. And in a world of DEI rollbacks, James says Costco's strategy isn't going anywhere.
We think of this as not so much for the social good, although I think it is. We think of this as part of a meritocracy.
Business strength, on the other hand, he says that is changing.
There's a lot of things to say the consumer is starting to buckle a little bit. At the same time, I think the uncertainty coming out of Washington is causing businesses to slow down.
All that today and much more. It's Thursday, February 27th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin. Yesterday, the Dow, it was its turn to be down for the day. The S&P 500 and the NASDAQ actually turned things around. They were up after 4 days in a row of losses. If you check out yields this morning on the Treasury market, you'll see that right now the 10 years back above 4.3%, 431. The 2 years at 411. And then Bitcoin, which has been under pretty severe pressure over the last several sessions, is now at 86,951. The most interesting thing I've heard recently was that heist, that North Korean scam where the hacking incident where they took about $1.4 billion in crypto. People are kind of saying maybe that is the reason why you see the decline that we've seen in Bitcoin prices over the last couple of days. The idea of a hacking on that level.
Fewer Fed cuts, that's what I've always thought.
It's just interesting. I hadn't really thought about it from that perspective. We reported on that hack earlier in the week, but the idea that, okay, if it can be stolen, if it can be taken just like regular currency, it's maybe a poke in the bubble in terms of the confidence.
And maybe another time where every time it's gotten down into the 80s or even low 90s, it's been a time to buy again. But when I said last time, if you bought it at 5,000 or 6,000, it's just hard to think about buying it at 86,000. Then immediately the hodlers send in these messages. You don't need to buy a whole. I know you don't need to buy a whole one. You could buy 10 cents worth if you want, but still the valuation at 86 is different than if you bought it at 6,000.
We'll see. Meantime, AI bellwether Nvidia reporting fourth quarter earnings and revenue. It topped analyst expectations. Sales growing 78% year over year, and the company gave solid revenue guidance for the current quarter. Revenue from sales to data centers also coming in above expectations, though. I should mention the gross margin guidance is a bit light, focusing this year. A lot of the focus this year is going to be on how quickly Nvidia can ship its next generation Blackwell AI processors, especially in light of a recent report now that's claiming of some overheating issues with those chips. Nvidia CEO Jensen Huang addressing Blackwell in a special interview with John Fort.
It was logical to be concerned about the ramping of Blackwell, but we have now successfully ramped Blackwell. The other concern that people had was the Hopper Blackwell transition. It might create a pocket, an air pocket, and I think we're now well successfully behind the air pocket. We're going to have a good quarter this quarter. We had a great quarter. We're going to have a good quarter next quarter.
He also addressed a Chinese AI developer DeepSeek, whose emergence on the world stage last month caused a scare for Nvidia investors.
DeepSeek was fantastic. It was fantastic because it open sourced the reasoning model that's absolutely world class. Just about every AI developer in the world today has either incorporated R1 using, it's called distillation, distilled from R1, or using techniques that have been open sourced out of R1 so that their models could be a lot more capable. Across the world, AI has become better as a result of the last several months.
Despite fears that models like DeepSeek might reduce demand for Nvidia's top-of-the-line chips, others in the chip industry think Nvidia could actually see more demand.
Okay, thank you very much. We appreciate you being here, and we've put together a great cabinet, and we've had tremendous success. We've been given a lot of credit for having a very successful first month.
President Trump holding the first cabinet meeting of his second term at the gathering. He said Ukrainian President Volodymyr Zelensky would be visiting the White House tomorrow to sign that agreement on rare earth minerals. Elon Musk was also featured prominently at the meeting. The president asked him to speak first before any other guests on his Doge cost-cutting effort. Musk spoke about the emails to government employees, telling them they'd be fired if they didn't list recent work accomplishments.
We got a partial response. We're going to send another email. But our goal is not to be capricious or unfair. We want to give people every opportunity to send an email. And the email could simply be, what I'm working on is too sensitive or classified to describe.
I'd like to add that those million people that haven't responded, though, Elon, they are on the bubble. You know, I wouldn't say that we're thrilled about it. You know, they haven't responded. Now, maybe they don't exist. Maybe they're going to be gone.
Yesterday's cabinet meeting included several nominees who haven't been confirmed yet, including Linda McMahon, tapped to lead the Education Department, and Elise Stefanik, who Trump wants to be U.S. ambassador to the UN.
Speaking of Elon Musk, we're also watching shares of Tesla. That stock closed below $300 yesterday for the first time since early November. Interesting timing. Of course, the stock took off after President Trump's election back in November. Tesla has now been down for 5 straight sessions, though, and 12 out of the last 15. It's lost more than a quarter of its value so far this year, but over the one-year period, it's still up by 48% because, again, it's above where it was on Election Day.
I guess so much for Musk doing so well with Trump. New York Times. Trump's strategy endangers shift to electric cars. I mean, you'd have to think that that's true.
Yeah, and not just here, but I think it was Axios or Politico was reporting that Tesla sales in Europe were down 48% from January 2025 compared to January 2024 because he's gotten involved in politics there, and it may have even been a more harsh.
I just think that, but all the cafe stand, all that stuff that we saw. Get so stringent, and I mean, California had some crazy.
But this goes back to
by 2030, you had to be at 50%.
Do you think Tesla's a car company, or do you think it's a AI,
right now,
driving robotic company?
They sell half the electric cars still. So
no, I know that. I'm just saying.
But for what it
is,
in
a normal world, it would be valued based on how many cars are physically sold, and you'd say to yourself, okay, this is a challenging situation. But maybe that's reflected now in the stock in some way. But at the same time. The entire company is a promise.
But the notion that the government was going to grease the skids on the transition to EVs.
Sure, but you saw.
But each time you get a new president, it's different.
We just had an analyst on the broadcast just yesterday who said that he's convinced that Elon Musk is going to grease the skids for federal special lanes for Tesla vehicles, or not just Tesla vehicles, but autonomous vehicles, and that it's going to somehow change the landscape. It may very well. And that's a little bit of what the promise was in the stock.
But it's not just Tesla. If you look at his other companies, too.
SpaceX is, and they will be a beneficiary. I mean, the ones that are hard ones to actually argue that they won't, right?
Right, and not just that, also the satellite company where, the Biden administration was looking on bringing, and again, this was in the Politico or Axios, whichever one I read, but the Biden administration had set up ways to bring internet coverage to rural areas, and it was all going to be done on cable lines. But, the argument is maybe you have some of that taken over by Starlink.
Which is it's part of SpaceX. So that would Starlink's a unit of SpaceX, so that was the...
Right.
But, and this goes to the Jeff Bezos of it all, Amazon, starting next year, is going to have Kuiper, which is going to compete with Starlink.
Yeah.
And so it'll be very interesting to see how that plays out. And we've talked about the Blue Origin side of the whole universe, which is the actual spaceships. Amazon, in this case, technically is going to own the satellites, which will be brought to space in part by Blue Origin. By the way, in part by Starlink, too. Or not Starlink, but SpaceX, just to confuse all the issues.
I always loved science fiction, but as a kid, obviously. And if we are going to be any of that's going to happen, we need to be multiplanetary. But it's not like it's like his singular goal in his life is to make the human species. To me, it's like, I like it here. You know what I mean? And we need to treat the earth well and everything, but I'm in no rush to go. Well, maybe it's that Matt Damon movie where he's eating poop or potatoes
that were made,
grown
farmed in his.
Yeah, it seems I don't want to. I like it here. Do you think we need to be if for any of that to happen, we need to eventually be multiplanetary, right?
Eventually, I don't know that it's happening.
I know. It's weird to have that as a singular goal in your lifetime, which is why he's
got a lot of.
He does, but he's such a unique individual in that regard. Once, obviously, everybody have a bunch of kids too, doing his part.
A child has died from the measles outbreak that's currently hitting West Texas. It's the first time that we've seen a U.S. death from the disease in a decade. The school-aged child hadn't been vaccinated. Health and Human Services Secretary Robert F. Kennedy Jr. spoke about the outbreak at yesterday's Trump administration cabinet meeting.
Put out a post on it yesterday, and we're going to continue to follow it. Incidentally, there have been 4 measles outbreaks this year. In this country last year, there were 16. So it's not unusual. We have measles outbreaks every year.
You sound a little under the weather yourself right now.
I have a permanently bad throat.
At least 124 people have so far been infected with the measles in the South, mostly children. Separately, the FDA has canceled a meeting that was set for next month of a vaccine advisory committee to select strains to be included in next season's flu shot. One of the committee members told CNBC that the meeting was canceled without explanation, and there was no indication of whether it will be rescheduled.
We got this news just in the last 12 hours or so. Actor Gene Hackman has died. Authorities in New Mexico said Hackman, his wife, and his dog were all found dead at their home in Santa Fe yesterday. They said foul play was not suspected. Hackman was nominated for 5 Academy Awards. He won Best Actor for The French Connection in 1972 and Best Supporting Actor for my favorite role I have a lot of them for him. Unforgiven in 1993. Little Bill Daggett, man.
There's so many.
Is that a great role? There are. He's 95 years old. Interesting that he and Clint Eastwood were both born in 1930. They were both about 62 when they did Unforgiven, and Clint won Best Director for Unforgiven, and Gene Hackman won Best Supporting Actor. But I think of him I just saw The Firm the other day again. He was just great. In The Firm and No Way Out.
My favorite's always been Hoosiers. I'll watch that every couple of years again.
I do too.
Still tear up over it.
No Way Out.
No Way Out. He was, by the way, a friend of Jim Kramer's.
Yes.
And spent some time here at CNBC.
I met him out in Englewood Cliffs.
Yeah, Matt spent an entire show with him over his shoulder in the control room with it, but because he's close to Jim Kramer, and I feel like we all felt like we were close to him, even though I didn't know him.
He was so talented, because he's just a normal-looking guy. And any role
like a normal person,
right.
In person, he acted like a real person, not a jerk.
Superman. I mean, he totally filled that role too.
Yeah.
He's like
he could play anything.
Yeah, he was. He was really. I mean, one of my favorites. He may be. I love Clint too, obviously, but.
Clint, Morgan Freeman.
95, and I think Clint's going to be 95 in May. Yeah. Hackman already had his birthday, I think, in January.
Our condolences, and it's a very sad story.
This is Squawk Pod.
Stand by, Joe. His mic, cue.
Good morning and welcome back to Squawk Box live from the NASDAQ market site in Times Square. NASDAQ was you guys ready for the Boomer report?
Yep, go for it.
NASDAQ was the answer. What is the NASDAQ on Jeopardy last night?
Nice.
On what was...
Wait, what is the NASDAQ?
When it was,
was the question?
What is the NASDAQ? It was when it was, I think, founded. It was much longer ago than I
Was it the 70s?
remembered. What's that? I think so, 71 or something. And and they got it right. What is the NASDAQ? Boomer report. Okay, that's today's Boomer report.
There you go.
Do you ever watch?
I don't. I don't.
You could DVR it. You do get smarter watching, except that I forget what most of the answers by the next day, except for that one I got.
Let's talk to Eamon Javers right now, because business is trying to make sense of tariff threats coming out of the White House. But there have been a lot of mixed messages. Eamon's with us this morning from Washington. What's going on?
Yeah, a lot of plates spinning on a lot of sticks, Andrew, but a little bit of confusion at the White House yesterday over exactly which tariffs are likely to kick in on which date. A White House official tells me there's no change to the original schedule, which had the deadline for Canada and Mexico tariffs kicking in next week on March 4th. Remember, the president had postponed those, and a deadline for a study on reciprocal tariffs. That's going to happen on April 1st, and that's why you hear the president talk about April 2nd as a big possible date for more reciprocal tariffs worldwide. Meanwhile, President Trump said he's made up his mind for tariffs on the European Union, which he said he'll be announcing soon, and which will generally be 25%. He was sharply critical of Europeans for not accepting, as he said, American cars and farm products, and he expressed hostility to the European Union itself.
European Union's it was formed in order to screw the United States. I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it. And they've done a good job of it, but now I'm president.
So after talking to some officials behind the scenes, our understanding now is that these 25% tariffs on Europe would be put in place after that April 1st study is completed, assuming the study comes in the way the president expects it to. But there's a lot of moving parts here, and the president clearly wants to preserve his leverage and not make any commitments until he has to. So a lot of these things, guys, are simply open-ended at this point. Will he grant additional extensions? Will there be a requirement for additional studies? Will these tariffs ever actually kick in? All of that still TBD.
Question. The prospect of tariffs is almost worse than tariffs themselves, insofar as it creates a remarkable amount of uncertainty for businesses that are trying to think about whether they should invest in something, not invest in something, and what comes next, right? That is the big question. I'm not suggesting, by the way, obviously, tariffs that are, uniquely, high are, would be very, very difficult. But just the prospect that alone is a challenge. And so the question is whether you believe over the next 3.5 or so years, this is going to be an ongoing debate that's never going to leave us, or do you think that there is some finish line where there's at least certainty around what happens next?
Yeah, I don't think there's going to be a finish line here, Andrew. I think the president likes this leverage. You talk about the prospect of tariffs being tricky for businesses that are trying to plan, 3 quarters ahead or what have you. But the prospect of tariffs is very useful for President Trump, right? It gives him negotiating leverage as he sits down with all these world leaders and gets those pressure points to get them to deliver the things that he views as wins, right? The various announcements, ribbon cuttings, investments, all the things that he wants to do for the American people. So I think Trump likes keeping everybody on the back foot a little bit here. He likes this uncertainty. He likes being aggressive with foreign leaders. And I think he's going to keep that up in some shape or form. These individual cases might be resolved, but other things will pop up as this administration goes on. Now, that's just a prediction based on having watched Trump for a long, long time.
I appreciate that. But then, Eamon, I'm sure if you're the CEO of Ford and you have a conversation with the president, you're saying, look, I'm hoarding parts, I'm hoarding supplies because I think you're about to tariff these people in Mexico, and I don't know what else to do about it. You got to make a decision. You got to just tell me what's going to happen. And you think who has more influence in a very unique way over the president, which is, do the business leaders in America come to him, and does the stock market and the bond market tell him what to do, or is it the foreign leaders and what he's hoping to extract from them in some other way?
I mean, I think the bond market is going to be very influential here, right? And if we start to see the bond market moving on this, and I think the president does watch the stock market, right? So
the dollar,
if
too.
that uncertainty starts to move the needle on stocks, I think that could be a problem. I think one of the reasons why you see these delays kick up in the first place, Andrew, is because the president watches the stock market and he sees the stock market tremble when we come close to one of these deadlines. And so he kicks the can down the road, preserving his leverage, easing the impact on the market, and ultimately creating a little bit more uncertainty for business. But it gives him that negotiating wiggle room that he wants and preserves that leverage that he wants. So I think, you're going to see a series of can kicks here in various ways. Now, some of these tariffs might come into effect, no question. But I think the overall tariff picture will be only slightly more clear by the time we get to the end of this administration than it is now, because the president will continue to introduce new ideas to be tariffed. You know, he raised the other day the idea of a VAT tax in Europe, and that is equivalent, he said, to a tariff. And so does that open up a negotiation over European taxation of American products that come in? And how is that going to be reciprocal versus American taxes? All of those questions are going to continue to be raised by this administration as he seeks parity and negotiating leverage.
Eamon, it reminds me a lot of what we've always thought of with the Fed chairman, where the Fed chairman will kind of introduce new ideas to the markets and let the markets kind of get used to those ideas. You know, you'll hear it from different Fed officials. They'll kind of drop out these trial balloons to see how the market reacts to some of those things, so that the market get used to ideas before they really drop them on entirely. And that's what the tariffs feel like. But I think it's just the new reality of a president who feels very comfortable using economic incentives and sticks and carrots in all of the foreign policy talks and all of those foreign negotiations that he's doing over policy issues. I mean, this is the reality of it's a little messy. It's a little uncomfortable. You can say the same thing with the move to say that Chevron is not going to be able to continue to produce oil in Venezuela because he has things he wants from Venezuela that he's not getting. Now, the president has set a July deadline for that, and we'll see what happens between now and then. But in the meantime, you have a company, Chevron, that has to figure out whether it goes ahead with this while it's used as a negotiation tactic to try and get something else that Trump wants from Venezuela, which is for them to take back more of the people who have come here illegally from Venezuela.
That's exactly right, Becky. I mean, this president likes to have that negotiating leverage, likes to put the pressure on. Remember, all these deadlines, what he's doing is setting up a process here in which all the deadlines are up to him by fiat, right? So he's never boxed in. He can continue to extend them as long as he likes. I mean, you know, you look at the comments the president made in the Oval Office the other day, and I think you have to just take Donald Trump at his word on this. You know, he made a joke, but it was very true, in which he said something like, you know, there's God and there's country and then there's tariffs. You know, tariffs are like in my top 4 things that I love in the world. And he was telling you how he feels about this negotiating tool and this diplomatic tool and this business influence tool that he has at his side. He's willing to use it and be very disruptive about it in order to get what he feels he needs to achieve based on what he told his voters he was going to do.
Yeah, like it's April 2nd, too. Trump said, you know, it's like you don't get married on April 1st. You don't get married on April 1st, do you? I mean, it's just bad, right? Yeah.
Well, the study gets finished on April 1st, and then they may do the tariffs on April 2nd.
But you don't want to do something.
Watch for all kinds of loopholes and delays there, too.
Right. Okay.
You don't want to do that.
Tease will be next.
Still to come, a private equity veteran joins us, Blackstone's former president Tony James. He sits on the board of Costco, and he says he's not seeing the strength in business that his Republican friends were excited about under a Trump administration.
What's my supply chain going to cost? I don't know. Can I export? Are there going to be reciprocal duties? I don't know. Should I build another plant? Let's wait and see.
Or strength on the ground.
I actually think we are slowing.
Squawk Pod will be right back. Welcome back to Squawk Pod.
Up and Andrew, Q.
You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernen and Becky Quick on a Thursday morning. From the state of the stock market to major companies rolling back DEI policies, there's so much going on. And our next guest says concerns loom for business leaders because many fear losing access, influence, and potentially attracting retribution. I want to talk about all of these things to discuss everything that's going on in our economy, what it means to be a CEO today. Former Blackstone president and COO Tony James. Also, we should mention the chairman of retailer Costco, and we can get a pulse on what's going on with the state of the consumer as well. Good morning to you.
Morning, Andrew.
Okay, so I'm just curious, your sort of sense of confidence in today's economy relative to what we're seeing in the stock market. What's your sort of gut on what's happening here?
I think the economy's weakening. It didn't have a lot of momentum, but it was okay. But it's definitely starting to turn down, I think. The consumer, there's several warning signs. Confidence was down, obviously. The base of consumers that are driving spending is narrowed to affluent. Defaults, delinquencies are rising. Meme stocks are down. There's a lot of things to say the consumer is starting to buckle a little bit. At the same time, I think the uncertainty coming out of Washington is causing businesses to slow down. What's my supply chain going to cost? I don't know. Can I export? Are there going to be reciprocal duties? I don't know. Should I build another plant? Let's wait and see.
Okay, but just help me with this, because there feels like there's a disconnect. We've had so many business leaders come on our air, I would say over the last 2 or 3 months, and say, oh my goodness, we're going to become unshackled by regulations that are just going to disappear. We are excited about, taxes, all sorts of things, right? I mean, you've heard that over and over again. So explain that with the perspective that you're offering right now.
Well, there's certainly been an ebullience about my Republican friends who are business leaders. I agree. One of the greatest eras of American history. It's going to unleash the deals business and so on and so forth. I don't see it happening. I mean, on the ground. I actually think we are slowing. For all the reasons I mentioned, I think business leaders are very reluctant to stick their head up right now and start complaining.
Hey, Tony, just what we've heard over the last week from a lot of the retailers that have been reporting their earnings is that they're cautious about this next year that's coming up. But the results they saw in December and even in January have been stronger than they had anticipated. The consumers have been doing better. What do you see, maybe through Costco, maybe through other places, that makes you think that the consumers actually are already starting to turn down?
I don't think I see it at Costco, honestly, but I'd say they generally target a more affluent consumer. The average Costco consumer has about 2 times the national median average of wages. And those results are holding up. Are they exceeding expectations, like you said, Becky? No. But they're holding up.
Home Depot and Lowe's in the last 2 days have both said that they've exceeded their own expectations on some of these things. And January was pretty strong for Walmart.
Yeah. January was, but Walmart also blew a caution whistle on the future. I'd say Costco's hanging in there, but that's not where we see the slowdown. It's in confidence. Ironically, something like as simple as egg prices seem to have a lot of correlation with the economy and consumer attitudes, and obviously you know where those are going.
Well, we know why they're there. It's a total one-off. But do you think that we were over-regulated, the economy and business, during the Biden administration? You think only Republican business people are optimistic about a more friendly regulatory environment for business? You don't think there's anything to that?
No, I totally agree with you. I think all business executives felt we were over-regulated, honestly. And I think there's both Republicans and Democrats, there's a lot of good things that they like about the directions that President Trump is going.
Okay.
However, there's also a lot of uncertainty.
Tariffs.
And a lot of variability. Yeah. And it's very hard if you're a business to plan right now. We own a fertilizer company that sells a lot into Canada. We were going to build a new plant. Now we're holding off. If there's duties on Canada and the reciprocal duties coming back, right, we don't know what that does to us. Similarly, a lot of our companies, the supply chains are completely up in the air. What's the cost of goods and how?
That's all tariff related. Is where a lot of the
tariff related. Some of that. We have plenty of healthcare companies that are looking at much slower regulatory approvals with Doge and everything. So if you're a biotech company and you had 1 year's worth of runway in your cash, now maybe you have to slow things down, stretch it out so you have 2 years.
They already are assuming that cuts at the FDA are going to make.
We have to.
What, advisory panels?
They have to assume that, because running out of money is death.
The cuts, have there been cuts already at the FDA that would cause clinical trials to be delayed?
I don't know, actually, but that's not really the concern. No one's going to count the cuts. It's the chaos down there. It's the reduced.
You see any positives to trying to rein in government waste abuse?
100%.
You do?
Every one of the last 5 presidents, both parties have said government's too big, I'll cut it back, and they failed. And I think this is a lot like Elon's approach to, say, Tesla. Cut, maybe overcut, cut radically, and then if you've cut too much, you can add it back. And that's the only way you make significant cost.
And so do you think he's right about that? And I ask because the other thing is he said, and I don't know whether voters listen to this or not, he explicitly said before the election that there was going to be pain. There was going to be, now he suggested it was a temporary pain because he thinks that on the other side it's going to be better. But the question is whether, we are going to, quote unquote, suffer for 6 months or a year, and that there's, a rainbow on the other side.
Well, there's a lot of stuff thrown in here together, so let's just separate it out a little bit. there's certainly, the business community is certainly, I think, 100% for less regulation. It's less government waste. Tariffs can have a very good effect if they're used as a bargaining chip to get other deals, and if they're used to lower barriers from other countries. If it triggers a trade war, that's a different thing. So tariffs is a little hard to know which way it goes. Is it beneficial? Is it not? However, all those things, if you're a business executive right now, you don't know the path of the future. So that causes you to hold back on things temporarily. So I threw the business in there. I think the consumer is suffering, confidence is coming down, but business is not providing a counterbalance by surging forward. They're watching, keeping their heads down right now.
How much of an impact does the rate have on all of this? Because with yields down pretty substantially over the last week or two, maybe the market is helping out just in terms of confidence. I would think it would help both consumer and business confidence if those rates do come down.
Well, rates are down a little bit, but at the same time, the Fed's saying we're going to pause further cuts.
Right.
So I think psychologically that's probably a net negative.
Okay.
And then when you look at mortgage rates or things that affect building, they're not really down.
Yeah.
And then you look at treasuries, they went up, they're off a little bit. I think there's a lot of reasons to think longer term rates are headed higher.
Can you speak to what's happening in the world of financials, maybe even private equity, your former firm? There was the sense there was going to be all sorts of deal making. I think what you're suggesting is right now there's not, because nobody knows what's about to happen. Do you foresee that to be a long-term, over the next 3 or 4 years thing? Or do you say this tariff thing is going to get resolved in 3 or 4 months, the tax thing will hopefully get resolved at the end of the year, and then you're off to the races? Or maybe you're not. I don't know.
I think, well, all the industry participants are saying it's going to be a big year for deals, and their pipelines are growing. And I believe them. I'm not sure that choppy stock market or a softening economy is so bad for that, honestly. And there's there is capital available, and the rates are affordable from a private equity standpoint. So I think you could well have a deal boom. There's a big backlog of companies that need to be sold in all their portfolios. You know that they're not going public, they need to be sold. And there's a huge boom in what's called continuation vehicles.
By the way, should we worry about continuation vehicles? I mean, that's just a euphemism for, if I dare I say, for businesses is like a hot potato that can't really be sold to another strategic or somebody else. And so they're basically kept inside this sort of system so that the valuation, I would argue, can never fully be exposed. But you may have a different view of what these continuation vehicles are about.
I think the risk is almost on the other side of that one.
Okay.
The implication of what you were saying was that these sponsors are trying to sell their dogs a little bit. I actually think they're incentivized to hang on to their best companies. And they're also incentivized, the way the economics works, to do that at a pretty good price for the new money coming in. Maybe it's not the optimal exit for the old money that needs out. So if they're...
But sometimes it's the same people.
Sometimes.
Meaning coming in and out, right?
Sometimes your existing LPs can exit, but it's generally new money, and some of them can roll, but you need a new pricer to come in and put new money into the deal to set the quote market price.
Right. How about carried interest? You going to be okay without that?
You mean not paying higher taxes?
I mean, do you think it's okay? Is that, I don't, we've had certain PE guys that will unabashedly defend David and others. I don't know where you come down on that. Have you felt bad the entire time when you were at Blackstone?
No, I haven't felt bad. And it's not just self-serving. Carried interest is actually a piece of a carried gain, a capital gain. And
I'm going to turn it over to my colleague.
You believe it?
And I don't know how it's philosophically different than Bill Gates getting free stock when he starts Microsoft.
Interesting. Okay.
So I don't know if we want to go down that rabbit hole.
No, I want you to with Andrew.
I'll go very.
We could do a whole segment on that another time.
I'll go very quickly with you, which is if you want to be a founder of a company, God bless, and if you want to get those shares at the absolute very beginning, so we can have that discussion. Otherwise, if you're basically using other people's capital to invest and pretending it's your own, you should not be getting a different tax treatment than anybody else.
Is that a question?
I'm just making. I'm suggesting that that's the argument. And what I'm saying.
Well, okay.
Look, there's some venture capitalists who would say that they got into.
So Becky wants to start a restaurant.
Correct.
And she comes to you and says, "I don't have enough money. Will you give me the money? Will you put some money into this restaurant?"
Correct.
And you put in $1 million, and I'll give you 80%. So her 20%.
Yep.
You're okay with that because Because she's working in the restaurant.
Yep.
Now you go and you say to your buddy, I think Becky's a brilliant chef. This is going to be a great restaurant.
Right.
But I don't have $1 million. If you give me half of that,
right.
I'll take 60% of the equity. You take 40%. Now you've charged him a carried interest.
Correct. But I'm going to tell you two things. There's a fallacy to what you just said.
Okay.
Most private equity deals are not at the founder.
That's more VC. That's more venture capital.
This is later on. So if you want to be Series A, Round A, we can have that conversation. Everything else, let's not even discuss because it is absolutely a lie. I'm sorry to say it that way because because people in the private equity industry oftentimes use this founding thing, and I say
it sounds like venture capital.
I say, when's the last time that you invested in a founding of anything? Usually not. So I just don't understand that argument.
Yeah, I hear what you're saying, but I think it's not black and white like that. A lot of times, private equity fundamentally transforms a company.
Right, but
it's not just.
Do you think you're a special? Do you think that your labor is somehow special compared to everybody else's labor in the entire country? Because it's the only industry that has this tax break. Well, the only industry.
If private equity doesn't take that share of the gain, where does it go?
What do you mean?
If private equity doesn't take 20% of the gains on a realization, where is that?
That's a fee, and you can.
No. But if private equity doesn't charge that, where does it go?
Hopefully back into the business.
No, it goes to the other investors, correct? The investors in the fund.
Sure. Okay.
Okay. And if they're tax exempt, does it raise any taxes?
Well, no. By the way, and that's the other thing.
So
most
actually,
of them are tax exempt.
So I would argue that it raises more taxes.
You'd argue it raises more taxes. Okay.
Right, because the Steve Schwarzmans of the world, they pay.
You don't think you could still charge 20% and pay taxes on them? A tax on that money? I don't understand that. You technically could still charge a 20%.
You could put your hand up and pay more taxes, sure.
No. I'm saying you could get the 20% still and then pay that as a fee as opposed to pretending it's not a fee.
So I think we ought to move on, but do you think this
reminds me
is this a moral thing or
this reminds me of David Rubenstein?
Is this a moral thing or is this a revenue thing you're trying to do?
No, moral only. Moral only. It has nothing to do with raising revenue. I completely agree that it's a de minimis amount. But given that
you got to admit it's interesting. Like David's uber liberal. You're uber liberal. You guys can still somehow come to and be super Republicans when it comes to you twist yourself into a pretzel to get to this point. I love it. I love that you're. I mean, Rubenstein. Aren't you amazed at how?
No one's ever called me uber liberal before.
Right.
Okay. Well, there you go.
I'm a centrist Democrat, but I don't know that qualifies as uber liberal.
That's an oxymoron.
Tony, I have a separate question on a completely other topic, which is DEI. Obviously, it's swept the country one way and is now sweeping the country another way, in large part because of President Trump. Costco obviously is ending its DEI programs in large part.
No.
Well, I mean, you're keeping some, but not completely.
We haven't changed our DEI program.
At all?
No.
Oh, then I'm mistaken. So.
There were headlines to that effect. I saw them.
No, there were headlines saying, signaling Costco out as the company that's not
Costco. I was thinking you said Blackstone, or
BlackRock. BlackRock certainly retreated. Yeah.
Yes.
Costco has gotten a lot of visibility, more than we ever wanted or needed, because it's standing behind its current policies and procedures, and none of them are illegal. We've had every legal lawyer look at it. And none of them are new. None of them are post-George Floyd. These things go back literally to the company's founding. We took an executive vice president from operations and made him our first diversity officer over 20 years ago. We think of this as not so much for the social good, although I think it is. We think of this as part of a meritocracy. If we attract a broader talent pool, we have 300,000 employees. We attract a broader talent pool, and we work with them all individually, given their different backgrounds, to be the best professionals they can be. We have a better employee base to choose from. And I think it enhances our ability to be a meritocracy. Costco is the highest torqued retailer in the world. We had to do the biggest volume per building, the biggest volume per square foot on the smallest margins. We have to execute flawlessly every single day. We can't have anything that's not based on merit.
But how scared are you that the fact that you then have this program and you're willing to come talk about it on TV, that your company's not going to be targeted by this administration in some way? Isn't that why every other company in America has tried to get rid of this? Not just the administration, by the way, but also the idea of boycotts and other things that people like Robbie Starbuck and others are trying to build.
Look, obviously it's unwanted attention because we're not a political company. We just want to run a good business. This is core to the business, it's core to the way we always run the business. So it's unwanted attention and it brings unnecessary risk, absolutely. But at the same time, it's core to our values, and we're not doing anything with quotas, we're not doing anything with preferences or anything like that. We have nothing that could be remotely deemed illegal under the new interpretation, either Supreme Court or administration.
Tony, this almost reminds me that a well-run company has had ESG in their blood long before someone even put letters. To run a company effectively for consumers, shareholders, citizens, people that you live near, you have to mind all your P's and Q's for ESG in the first place. You don't need to be told. If you're really good at running a business, all those things follow, right?
That's true. That's true.
But you want to say you're doing it.
It became popular to say you're doing it.
I know.
And to point to all the things you're doing.
Right.
Right. For all companies. Virtue signaling was a big thing, right? I got
What do you and Steve talk about? Sports? I mean, I don't. I want to be a fly on the wall. Or you covered the whole gamut. There's no one left out between you and Schwartzman. It's like, right? It's the entire world.
You mean politically, Steve and I?
Yeah.
We agreed on almost everything when it came to business.
Okay.
Well, that's what made us great partners. We came at it differently. We've got different personalities. He's been on here plenty.
Yeah.
But at the end of the day, we always agreed on the right course for Blackstone.
And carried interest. Got it.
Tony, I want to thank you for coming in. I want you to thank you for engaging in this crazy conversation and debate, which is a perennial conversation. You can have it any morning. Anytime you want to come back and have that discussion, we can do it.
Sign him up now.
Next time, let's come in. We'll actually marshal this and we'll focus on this and we'll really nail it.
Okay.
Because I actually think I can convince you that it's got some merit.
Okay, I'd love that.
All right.
Love that.
Let's bring Rubenstein in here too.
We got a deal.
That's the pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern for the latest news and analysis.
You guys ready for the Boomer Report?
Yep, go for it.
And get the best of our show right into your ears when you follow Squawk Pod wherever you get your podcasts. Tell a friend to follow too. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.